How is everyone doing? Welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berquist. Today, I wanted to bring everybody an episode on a little bit of the history of Fannie Mae and Freddie Mac. How did these organizations evolve over time? Were they involved in any kind of scandals before the financial crisis? What was their role during the financial crisis? What has kind of happened to them after the financial crisis? And where do we stand today? I think it is a very interesting story. It is important to look at these things and kind of wonder what is happening and what could potentially happen with these organizations as time goes on here. I would like to note beforehand that this episode is, I like to give a big shout out to Night Trade 24, who basically asked for this episode. And I apologize. It took me about a month to kind of get to this and develop it and bring it out here. But here we go. So I went through a number of sources, and I was going to share things from, a couple different books and articles and things like that. And I basically decided to scrap that. I went to one of my favorite websites, Investopedia, and basically said, hey, what do they got? And sure enough, they have a whole page dedicated to the history of Fannie Mae and Freddie Mac, how this whole thing unfolded. Pretty much nailed all the key things that I wanted to hit on in this video. So I figured I'd just show this. There is a link to the website article here in the description. So if you want to go check it out yourself, you're more than welcome to do so. But let's hop into this here. So Fannie Mae and Freddie Mac, an overview. So basically how they help the mortgage market and provide crisis relief. So the Federal National Mortgage Association, commonly known as Fannie Mae, and the Federal Home Loan Mortgage Corporation, known as Freddie Mac, are the two government-sponsored enterprises, also known as GSEs. Sorry, there's a lot of acronyms as we go through this. Chartered by the U.S. Congress in 1938. Neither originates or services its own mortgages. That's very important. I think one of the biggest misconceptions with Fannie Mae and Freddie Mac is that people think it's kind of like the SBA. People think that the SBA originates mortgages. They think that Fannie Mae and Freddie Mac originates that. None of those organizations do that. They are just there to kind of help to facilitate things, as we'll see in the mortgage market, but they create what's known as the secondary market, the secondary mortgage market. In other words, banks will generate, banks and mortgage companies, they will generate the residential mortgages, and then they will sell them in the secondary market to Fannie Mae and Freddie Mac. And as a result of that, all of the banks and mortgage companies, if they want to sell the mortgages, they have to follow the Fannie Mae and Freddie Mac guidelines for underwriting, for closing. They have a whole checklist, all these things they have to follow. They have to follow, different regulations like TILA and RESPA and the Mortgage Settlement Act and all that. And they have to make sure that everything is followed precisely to the letter before they can sell that mortgage into the secondary market to either one of these organizations. So, but let's continue. So, instead, they buy and guarantee mortgages issued through lenders in the secondary mortgage market. Their influence over the U.S. real estate market is hard to overstate. The names Fannie Mae and Freddie Mac rarely surface on investing sites or financial news headlines, yet these enterprises have been the pillars on which the American housing market of the last 80 years has largely been built. They sway lies in securitizing loans, effectively transforming individual mortgages into tradable bonds. This constant flow of capital allows lenders to extend more credit, ultimately shaping interest rates and making homeownership accessible to millions of Americans. So here's a look at how they work, their roles in the 2008 financial crisis, their work for renters and homeowners during the COVID-19 pandemic, and their prospects in the years ahead. Now, we're not going to cover all those things. I'm not really going to get into too much of their role during the COVID-19 pandemic because I really want to focus more on the financial crisis, but just a few key takeaways here. So Fannie Mae was first chartered by the U.S. government in 1938 to help boost the mortgage market, while Congress chartered Freddie Mac in 1970 to extend credit beyond commercial banks. Neither organization originates or services loans, but buys mortgages from lenders to hold or repackage as mortgage-backed securities, also known as MBS. Lenders use the money from selling mortgages to Fannie Mae and Freddie Mac to originate more loans, widening the pool of money available for individuals and family to buy homes. Fannie Mae and Freddie Mac issued a temporary moratorium on foreclosures and evictions because of the COVID-19 pandemic, but that's kind of over. So, so what is Fannie Mae? So, in the early 20th century, homeownership was out of reach for most people in the US unless you could pay cash for an entire home, which few people could. You were looking at a prohibitively large down payment and a short term loan, culminating in a big balloon payment. So, what does that mean in English? Okay, so 1930s. Great Depression, really, horrible job market. What, 25-30% of people out of work, can't find jobs. You had people starving. You had all kinds of mass problems across the U.S. economy. So if you were going to buy a house, say, and again, these numbers are kind of crazy to think about today. Say you wanted to buy a house, the cost of the house was, wait for it, $10,000. And, so you wanted to buy that house, you had to put down, if you were going to get a loan from the bank, at least 50%. If not a little bit more. Banks would basically say, yes, okay, you buy that house for $10,000, you put down $5,000 or $6,000 on the house, we'll make you a mortgage of $4,000. And oh, by the way, they're going to lend you that $4,000 on a very short term basis, 5, 10, maybe 15 years at the most. There was no such thing as 30-year mortgages, nothing like that back in those days. So basically, the government sat there and said, okay, how can we make this easier? Like most people, it's not realistic that most people are going to be able to come up with a 40, 50, 60% down payment to buy a house. So how can we do that? And thus came Fannie Mae. So hopefully that helps to kind of give a little bit of context to this. So even if you could buy a home during the Great Depression, you might have been among the nearly 1 in 4 homeowners who lost their homes to foreclosure. The banks also had no money to lend, and the nation faced a housing crisis. So the U.S. Congress responded in 1938 with the National Housing Act, creating the Federal National Mortgage Association, better known as Fannie Mae. From its acronym FNMA, to supply reliable, steady funding for housing, it brought a new type of mortgage to the market, a long-term fixed-rate loan with an option to refinance anytime. This has become the primary way many Americans buy their first homes. So when Fannie Mae came into existence, that's when the whole creation of the 30-year mortgage was established. Now, it's also very important to keep in mind, what is one of the key risks that banks face that they have to deal with all the time? It's interest rate risk. And I could literally talk for 3 hours about interest rate risk and how critical it is for banks to manage that if they don't want to end up in a situation where their loan portfolio is underwater, where their return on assets, return on equity is not great. So banks really have to be cognizant of this. And one of the ways they combated this was to say, listen, we can create this secondary mortgage market. We can sell, the bank can originate the loan and then sell it into the secondary market. And to entice people to do this, we'll give them a 30-year mortgage, and we'll give them the 30-year mortgage, and that will entice them to do it. And we can tell them that they can refinance at any time, no penalty. But the great thing for banks was that they got to basically, because they were selling the loan, they got to offload the interest rate risk. And now they did not have to worry about what were the interest rates of the loans that were sitting on their books, because those loans were getting sold off into the secondary market. They were just originating and selling, and collecting the fees from doing so, and thus enabled them to keep on lending to more and more people. So that was kind of the idea here. So just like I said, a lot going on here, but just some key things to understand. So, okay. Yeah. So Fannie Mae initially bought mortgages insured by the Federal Housing Administration, the FHA, and later added loans guaranteed by the Veterans Administration, the VA, later called Veterans Affairs. The Johnson administration privatized Fannie Mae in 1968, making it a shareholder-owned company funded entirely with private capital. This would have significant effects later on, but it resulted from a budget gimmick. Starting in 1965, Fannie Mae was growing more rapidly. This might have been good for homeowners able to buy homes at the time, but bad for the Johnson presidential administration. An accounting quirk meant that Fannie Mae's mortgages were added to the annual budget expenditures, thus increasing the budget deficit. So 2 years later, we got Fannie Mae, or I should say 2 years later, Fannie Mae was authorized to buy conventional mortgages in addition to FHA and VA loans. The agency began issuing mortgage-backed securities, MBS, in the 1980s to offer more liquidity in the mortgage investment market. The money to buy mortgage-related assets came from issuing debt securities offered in the U.S. and international capital markets. So the important thing to note here was that, so Fannie Mae gets created in 1938, and then 30 years later, in 1968, as part of the Johnson administration, they privatized Fannie Mae and turned it into a shareholder-owned company funded entirely with private capital. So that's important because that's going to come up big in a few minutes here. So for decades, Fannie Mae would be the main buyer and seller of government-issued mortgages. So then, what is Freddie Mac? So Freddie Mac is the unofficial name of the Federal Home Loan Mortgage Corporation. It was established in 1970 under the Emergency Home Finance Act to expand the secondary mortgage market and reduce interest rate risk for banks. Oh, I think I just said that. In 1989, it was reorganized as a shareholder-owned company as part of the Financial Institutions Reform, Recovery, and Enforcement Act. So Freddie Mac's charter is like Fannie Mae's. It was meant to expand the secondary mortgage market and MBS by buying loans made by banks, savings and loans, and other lending institutions. But unlike Fannie Mae, which buys mortgages from major retail and commercial banks, Freddie Mac buys its loans from smaller banks, such as thrift banks that focus on providing banking services to underserved communities. So now we get into kind of what do Fannie Mae and Freddie Mac do. So Fannie Mae and Freddie Mac have similar charters, mandates, and regulatory structures. Each buys mortgages from lenders to hold in their portfolio or repackages as MBS that can be sold. In turn, lenders use the money from selling the mortgages to originate more loans. This helps individuals and families access a continuous and stable supply of mortgage funding. According to their charters, Fannie Mae and Freddie Mac establish secondary market facilities for residential mortgages and provide that the operations thereof shall be financed by private capital to maximize extent feasible. Both entities are mandated to do the following: maintain stability in the secondary market for residential mortgages, respond appropriately to the private capital market, offer ongoing support to the secondary market for residential mortgages by increasing the liquidity of mortgage investments and making more money available for residential mortgage financing. And then finally, promote access to mortgage credit by increasing the liquidity of mortgage investments and making more money available for residential mortgage financing. Okay, so who regulates Fannie Mae and Freddie Mac? So Fannie Mae and Freddie Mac, their congressional charters made them government-sponsored enterprises, or GSEs. Though private, they had ties to the U.S. federal government that was thought to provide a financial backstop with a line of credit from the U.S. Treasury for $2.25 billion. In September of 2008, during the height of the financial crisis, they were placed under the direct supervision of the federal government. In other words, they were nationalized. And then it says here, kind of like during regular times, the government ties were less apparent, but nonetheless important. Each was a unique company, unlike any other in the U.S. Here are some of the differences. The U.S. president appoints 5 of the 18 members of the organization's board of directors. The secretary of the Treasury is authorized to buy up to $2.25 billion of securities from each company to support its liquidity. Their securities are considered government securities under the Securities and Exchange Act of 1934. These securities did not have to be registered with the U.S. Securities and Exchange Commission. They could originate mortgages, but they could buy them for securitization or investment purposes. However, in 2008, a year that we're going to get to, the mortgage amounts were limited to $417,000, effectively closing them out of higher priced real estate areas, given their mission to target low and moderate income households. Both companies are exempt from state and local taxes. Both companies are regulated by the Department of Housing and Urban Development, HUD. and the Federal Housing Finance Agency, the FHFA. Should they face insolvency, this was not to be resolved through a bankruptcy process, but by Congress. Okay. And, both of these things offer what's called an implicit guarantee. So now let's get into the role in the financial crisis. So in the 1980s, a crisis that hit the savings and loan industry shrunk that sector's part in the real estate market significantly. And remember, it's Freddie Mac was the one that was designed and opened to buy loans from smaller banks from the S&L. So you had in the kind of late 80s, early 90s, you had what was called the S&L savings and loan crisis, where you literally had 2,000 thrifts and savings and loan banks failed. And it was a big disaster, led into kind of the recession of like 1990, 1991. And so that really put a hurting, especially on Freddie Mac. Shrunk the sector's part in the real estate market significantly. By the 1990s, computerization enabled far more efficient and faster processing of mortgage applications and MBSs. These, along with other industry changes, meant that Fannie Mae and Freddie Mac expanded significantly throughout the 1990s and early 2000s. During this period, there was a frequent debate about Fannie and Freddie and their holdings among economists, financial market professionals, and government officials. In other words, they were worried, they were concerned with how big the secondary market was becoming. And kind of like, if something went wrong, how would the government deal with that? How would regulators deal with that? How would the market deal with that? So there was a lot of concerns building for a long time. Even without some analysts' concerns over their ballooning balance sheets, Fannie Mae and Freddie Mac were facing regulatory scrutiny in the early 2000s. An investigation by the Office of the Federal Housing Enterprise Oversight, the independent agency overseeing the companies, exposed widespread accounting irregularities that made their operations unsafe and unsound. Both entities, it turns out, were using an accounting strategy that delayed accounting for expenses and inflated their income. This allowed them to present steady quarterly profit growth in order to smooth over, in the wording one executive used, reassuring investors. The tactics often involved the complex timing of derivative contracts. When their misaligned balance sheets finally surfaced, executives at both firms were forced out. Years of annual earnings reports had to be resubmitted, and billions in losses had to be accounted for, and millions in fines were to be paid. And let me express, that was before the financial crisis hit, before. In 2007, Fannie Mae and Freddie Mac began to take on massive losses on their retained portfolios, especially on their Alt-A and subprime investments. In 2008, the sheer size of their retained portfolios and mortgage guarantees led the FHFA and everyone else in the market to conclude that they would soon be insolvent. So on March 19th of that year, federal regulators allowed the two firms to take on another $200 billion in debt, hoping to stabilize them and the wider economy. However, by September 6, 2008, it was clear that the market believed the firms were in financial trouble, and the FHFA put the companies into conservatorship, meaning that they were nationalized. They received $190 billion in bailout funding, which was paid back by 2014. Good job. Nevertheless, they remain in conservatorship under the FHFA. So under the conservatorship agreement established during the 08-09 financial crisis, Fannie and Freddie were required to send most of their profits to the Treasury as repayment for being bailed out, preventing them from rebuilding their capital reserves. In 2019, however, new rules were enacted that would permit Fannie Mae and Freddie Mac to keep a combined $45 billion in earnings. This was later increased. This was seen as an initial step in a broader effort to reform the housing finance system, including ending the government's control over these entities. So now I want to skip down. So it says, fast fact here. In September 2019, the U.S. Treasury and the FHFA announced that Fannie Mae and Freddie Mac could start keeping their earnings to build up their capital reserves. The move was a step toward transitioning the two out of conservatorship. So in early 2024, Fannie Mae and Freddie Mac had net worths of $77.7 billion and $47.7 billion, respectively. I'm not really going to get into their role per se here during the COVID-19 crisis. They basically gave people forbearance agreements and stuff like that, and just helped people get through what was going on. Okay, here's the key thing I want to get to at the end here. So, what are the arguments for and against privatizing Fannie Mae and Freddie Mac? Those who advocate privatizing Fannie Mae and Freddie Mac argue that it would cut government risk and encourage more competition and efficiency within the mortgage market. They say that privatization could lead to a more sustainable housing finance system by limiting taxpayers' exposure to potential losses. However, opponents fear that privatization could lead to higher mortgage rates, less support for affordable housing, and increased market volatility. They argue that the government's role is crucial in ensuring stability and accessibility in the housing market, especially during economic downturns. Okay, so where do I fall on this argument? I think that both Fannie Mae and Freddie Mac should return to privatization for exactly the reasons that were laid out. It would reduce the government's risk. It would encourage more competition and efficiency within the mortgage market. And it could lead to more sustainable housing finance system by eliminating taxpayers' exposure to potential losses. Absolutely. People who say that the government needs to keep control. If I'll put it to you this way: if President Trump had been reelected to a second term, Fannie Mae and Freddie Mac would absolutely, within these last 4 years, they absolutely would have come out of conservatorship. That was the track that the Trump administration was taking. That's the track that the Trump administration had them on. They wanted to basically say, hey, the government doesn't need to basically have control over Fannie Mae and Freddie Mac. These are organizations that were always designed to operate within the private markets. So we need to privatize them and get them back to the way that they were and the way that they had operated for decades. We also want to take taxpayers off the hook here, take taxpayers off the hook for potential losses down the road. Again, if something were to happen or if we were to have some kind of financial meltdown, that, the government would always have the ability to step in. And they had already talked about proposals for, putting, obviously safeguards in place or things that could be done in a major crisis. And I just want to read everybody one thing here. I just saw this week, and I thought this was perfect timing on this, considering I was going to do this episode. It would take several years to get Fannie Mae and Freddie Mac out of federal conservatorship, even if Donald Trump wins a second term in the White House and tries to do it, or if even Kamala Harris wins and does the same. Former Federal Housing Finance Agency head Mark Calabria said in his remarks in Washington, D.C., Housing Wire reported, Trump's allies are reportedly discussing plans to privatize the two government-sponsored enterprises, the Wall Street Journal reported earlier. So yeah, I think there is some truth to that. It would take a couple of years, but the Trump administration was working on this back in 2018 and 2019. Thus, the tidbit that we saw here, the fast fact right here, September 2019, they were working. They had put these plans in motion, and that was their plan, that probably by 2021, we would have had both of these organizations back out as private companies, rolling, through the markets. But, and I think one thing that in other words, ask yourself, why does the government want control over this? They want control over it because obviously they want to keep their hands in the mortgage market, but they're also, Fannie Mae and Freddie Mac generate a ton of income, and they're a huge piggy bank for the government. And the government swipes money from these guys and puts it over into other, slush funds and pet projects and things that they have going on. If Fannie Mae and Freddie Mac are privatized, can Congress just go in and use them as a piggy bank and just take money out of them whenever they want to go fund other things? No, they cannot. And therein lies the biggest problem, I believe, for why these organizations have not, and the government just won't do it. Again, it just gets back to, why does the government need to be, ask yourself this question: does the government ever run anything efficiently? No, they do not. We got the post office loses billions of dollars every year. They tried to set up the Obamacare website, and that was they spent tens and tens, $100 million on the Obamacare website that never even worked. So I'm just a believer in a smaller government. I think that things run more efficiently when they're run privately in the capital markets, in our capital market systems. And I just think that's how it should be. But hopefully, I answered some of the questions here today in this interview. Like I said, the purpose of this episode was to give, and not to go on a political diatribe at the end here, but the purpose was to give everybody some background on what is Fannie Mae, what is Freddie Mac, how did these organizations start, how did they evolve over the years. Talk about the kind of a little bit of the scandal that they had there in the early 2000s before the financial crisis. What happened during the financial crisis. We had the total collapse of the mortgage market. Their balance sheets effectively imploded. They had to be nationalized and put into a conservatorship. Otherwise, they absolutely would have failed, and it would have been a catastrophe because they would have taken the entire financial system down right along with them. That's how big that was. I mean, the government really had no choice. The nice thing was the profits that they generated, they were able to pay back that 190 billion, probably $390 billion or whatever that the government gave them to bail them out. I mean, they were basically able to pay that money back in a relatively short period of time. I mean, by 2014, which was only about 4 or 5 years later. So that was great. But they remain to this day in this conservatorship, nationalized by the federal government. And there have been plans for years to try to privatize them again. There just is not will because of things that I mentioned in Congress. So that's the story there for Fannie Mae and Freddie Mac. I hope everybody enjoyed the episode and got a little bit of a history lesson out of this. So I would wrap up with this. Again, shout out to Night Trade 24 for suggesting this episode. I really appreciate it. If anybody has ideas for any episodes or anything like that, please let me know. You can email me at info@thebankernextdoor.com. Like I said, reach out to me with ideas for any future episodes you would like me to do or anything in particular you'd like me to focus on. Always happy to do it. But if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Please remember we are on YouTube, Rumble, and all major podcast platforms. Please make sure to leave your comments down below. Check out some of the other episodes that I have out there on the channel. There's a ton of comment. I've got up to episode 231. So a lot of really great content out there. Please go check out some of the other episodes, and I will be back to see everybody again real soon. Thanks a lot.